as we go live with the market today at 8:27, we asked the question, is now the time to invest? Is it now? How does it feel right now? How does the economy feel? What is the story? Welcome to the Smart Investor. Smart, why? Smart because you want to understand what's going on. And there's lots of things happening, lots of people talking to you, lots of stories to be told, a lot of things to understand. So, what do you do? Well, that's what I'm here for. Welcome to my channel. Don't forget to subscribe and like this video. So what's going on today? About 2 minutes before we start. So that should be very interesting to see how the market is reacting. But right now, the market is waiting. The market is waiting for some news. Today should be a good day. Futures are up. We had some good news about AI yesterday. So we should be in gaudy. But what you need to understand, and that's very important, is what is the story that is being told in the market today? Right now, we're hearing soft landing, but we're also seeing a decrease in rates. So if you've got both of those, makes sense, right? The only thing is, what if the Fed is wrong? What if that rate that's decreasing, the 50 bips, is really to fight the recession? That is the question. How do you know? Well, the way you do it is you don't try to understand what's actually happening, because no one knows what's really happening. I mean, you could see the numbers, but on the ground, who knows, right? So we're just reacting to numbers that might and might not be appropriate. But that's not the point. What's important is for you to realize that you need to understand the mood of the market. Right now, it would appear to be that there's some soft landing story. Keep in mind that the Fed has never won that battle of managing the except once, with lowering the interest rates and fighting the inflation, and at the same time stay out of recession. Only happened once. Okay, don't forget also, you need to know that it takes about 10 quarters for rates to impact the economy. So just about now, remember those rates that we got that you forgot about, that 500 basis points increase? That happened then. And therefore, we've got some interesting numbers. So therefore, all this is now happening now. If we're going to see some impact, it's going to happen now. And guess what? We are kind of seeing impact with unemployment. We're kind of seeing some impact with the consumer confidence. Let's see what happened today with the. I'm looking at the market right now to see how we're doing. In fact, why don't we go there and check out exactly how the market is reacting right now. Anyway, I will tell you what I'm seeing. That's probably easier. Okay, so what's going on right now is, well, hold on. Let's see. The Nasdaq. Let's take a look at the S&P. That's my favorite. Let's take a look at the SPY. How is the SPY doing this morning? It's 8:30. Well, nothing has opened yet, obviously. Let's see if the data show. Okay, here we go. 24 ETF. We haven't seen the numbers. It hasn't come out yet. I mean, it's 8:30. Let's give him a chance to react. Anyway, so while we're waiting for the market to start reacting to the GDP, let me tell you the story. Let me tell a story. The story is this: you have a problem because now it's a possibility, and we'll see some of the PCE number very soon. It's a possibility that you may be pumping up inflation again. Remember, that is exactly what happened in the 70s and the 80s. So how do you make money in an environment like that? Well, the only way to make money is really understanding what the market thinks is happening. Remember, the market is like a child, right? So you need to figure out exactly, what the baby is thinking. Unfortunately, the baby cries a lot. The baby wants this, wants that, wants its rate. Remember we were talking about we want lower rates? Okay, you got 50. In fact, you everyone thought we're going to get 25 bips, you got 50. We got more than we wanted. So we should have been happy about that. Where the market looked at it and it kind of said, okay. And then it kind of went down again. So not the greatest thing that has happened there. And the market is kind of wobbling around. I mean, if I'm looking at SPY, quite frankly, from yesterday, from let's say from September 18th. I mean, we're going to open wide today, but it doesn't mean much of anything because we went up before September 18. We were like at 562, and now we went up. Now we're at 570. It's not doing anything. Why is it not doing anything? Because the market is waiting for direction. Now, of course, for you as an investor, this is great. I'm looking out for you here by giving you some information, by telling you that there's a lull here. There's a lull where nothing is happening. So if you think that you understand certain corporation, if you understand certain stocks, if you like certain stocks and you're looking for the long term, but again, make sure whatever you're getting has to have a low PE, has to have it should be a small caps. Why small caps? Well, because they benefit best with lower rates. So you want to be in that category. Now, having said that, be careful. Be careful because the market is the market is a little bit overextended. Well, what do I mean by that? Well, if you look at the P ratio, if you look historical numbers, I mean, in the past, we used to have P ratios of 15. Now we're talking 26, we're talking 30, we're talking 56 for an NVIDIA. How much are you willing to pay for a stock? That's what's happening. So to recap, as far as the story is concerned, we should be in a soft landing camp. Just in case we're not, and in the recession, I would still not panic, right? I would not panic because the Fed has no intention of having a stock market crash and a recession coupled with one. So they've got plenty of ammunition to lower the rates. Remember, we were at we raised it at 500 basis points and then we're lowering it to 20, 50 bits. So we got plenty of room to go, right? Also, remember one thing that's important is that we've never had a recession. It's not like when we say, oh, recession, people, you're going to look at the window, people are going to be walking out without jobs. This is not that kind of a recession. This is not, 2000, when the dot-com bubble. This is not 2008, right? This is not 2020. This is not 1929, right, where things were really bad. Because there's nothing really going on except, well, maybe we pay a little bit too much for stocks. That's the only thing that's really happening here. That's basically all you have to worry about. We pay a little bit more for stocks. But frankly, if you think about it, do you really think that they want a market crash? Right? Because don't forget, there's the bear behind us, there's the animal behind us, right? There's this national debt that we're not talking too much about. And if we don't talk too much about it, it's okay. Trust me, because once we talk about that, we're going to be in major trouble. Now, if you look at what the candidates, both Trump and Harris are looking at in terms of economic plan, cut taxes, and spend money on the poor and the middle class, and to help you buy a house. And yeah, I mean, both camps, both Harris and Trump, are saying lots of things, right? Nobody's talking about the debt. Nobody's talking about the national debt, right? Because they can't talk about that. Because if they talk about the national debt, people are going to get depressed, right? The only way to fix a national debt, you don't pay for it. Meaning, every year we are refinancing $1 trillion. So what do? Well, you don't pay for it. You just let it go, right? Or you raise the retirement age, or you lower your monthly payment, or you cut Medicare. It's going to be a revolution, right? So what do? Well, we keep refinancing, and as long as they're willing to refinance us and pay us again. Every year we refinance $1 trillion or so, because we are 35 trillion. But it's still growing regardless. Yeah. So this thing about the election really is really a contest as who you like best. Don't think for 1 second that these people, either one of them, are talking about, oh, you know what, I have the secret sauce here. I mean, Trump said I'm going to cut taxes on the tips, and then she said I'm going to do the same thing, and he wants to lower taxes for everyone, and she wants to raise taxes for the rich, so she could give money to the poor. First of all, they're not. These things needs to go through Congress. This needs to go through the Senate. These things to be approved. None of this is going to happen the way they want it. They're just telling you what you want to hear, so that. But at the end of the day, do we really care about the taxes? And you say, I like him and I don't like her, or I like her and I don't like him. That's how people vote, believe it or not. Most people don't understand what's going on. These people are playing three-dimensional chess, and we're playing checkers, right? And that's what you want to do when you come to the stock market. Don't be a fool. Don't be taken out, right? Be like the Godfather. Michael, I want to be the one that pulled the strings. That's what you want to do. Right. And how do you do it? Well, you educate yourself. Educate yourself. I'm not saying educate yourself to understand what the plan of Kamala or Trump is going to be, because even if you were to understand it, which I'm not so sure they understand it either, even if it potentially is not going to pass the way they want it. So again, this is a beauty contest. It doesn't matter if you like Trump and he says certain things and it looks crazy and you're going to like him, and if you say stupid things, you're still going to like her because you don't like the other. And that's how it is. And that's why it's 50-50, right? But for you, what's more important, these people have jobs, right? Kamala and Trump, don't worry about them. They'll be just fine. They'll be just fine. So don't worry about them. You need to worry about you. You need to say, how am I going to make some money? Apart from playing the lotto and working 24 hours a day, how am I going to make some money? Well, it's very simple. The stock market offers the opportunity. I have tried both. I have tried, you buy rentals, and I'll make a video at some point on that. I'm trying to make some money renting housing and things, our houses. And okay, rates are very high right now, so I wouldn't get into this right now. But even if you were to get into it, I mean, it's a job. It's a job, and it is risky. No, you just sit there and collect the money. No, you don't. You don't collect the money from the renters. You got to collect the money. You got to pick the renters. You got to fix the house. You got to go and make sure everything is okay. You got to clean other people's stuff without mentioning exactly what. You got to be on top of it. Well, you could pay someone to do it. That's going to cost you, right? Or you got to get involved and buying more and more. But the risk goes up, right? So you need to buy liability insurance, right? You know how many people get shot renting housing? I'm exaggerating, obviously, but the point is, it is a job, right? You're not out there just sitting down collecting money. People pay you. Sometimes they pay you, sometimes they don't pay you. You got to get them out. You got to go to court. Trust me, you deal with people that you wouldn't want to deal on a daily basis. At the end of the day, if you like it, and I will tell you one thing that I've learned about rentals: the dirtier it is, the crummier it is, the more it is profitable. I mean, I don't know if you know, but Donald Trump's father used to own a lot of very, very slummy apartments in Brooklyn and Queens. That is where the money is, because nobody wants to do it. But the money is there. I'm not saying it's not profitable, but again, one thing that we do not hear enough is, what about the risk? What about the risk? In the stock market, at least, first it's cleaner. You sit there, you trade, you buy, you sell. I mean, it doesn't have to be a lot at the beginning. You'd be surprised how much money you can make. But at least you're able to evaluate the risk of what it is that you're buying. If you look at stocks, the market kind of tell you, for example, if I'm looking at a company like, let's say Tesla, for example, right? So you could go anywhere. You could go and look anywhere for Tesla in Yahoo Finance and in MarketWatch, whatever, right? It tells you the beta of the stock is 2.29. So basically, you know exactly what it is that you are buying because it tells you the stock is very volatile. So at least you know what you're getting into. Now, is it a bad thing? It's a good thing. It's a good thing. Why is it a good thing? I will show you, right? So if we, for example, if we take a look at Tesla, right? Tesla, oh wow, it closed at 257. It's going to open at 261 today. But the point is, over the past day, right, it went from 258 to 256, and now it potentially could be at 261. So the stock moves a lot, which is a good thing to make money, which is a good thing because you want things to do that. I know that everyone is used to, I want to buy at $1 and I want it to go to $100 and I made $100. That's how they show you with Nvidia. But you cannot get Nvidia every single day. It's impossible. Hedge funds people, portfolio managers don't make money by looking for Nvidia. Number two, right? That's what they tell you. They tell you so that you say, "Oh, okay, so that's what you're doing all day." No, because we're not. First of all, they would not be allowed to just have one stock. Why? Because of the risk. You need to manage the risk. How do you manage the risk of a portfolio? You need to diversify. You have. Not that I'm a big proponent of diversification. You know, Warren Buffett said, "I do not believe in diversification because it's diversification." Because when you diversify, you potentially buying things that you don't like. Let's say you're a millionaire, right? And you want to buy a bunch of cars. Great, you buy a Lamborghini, you could buy a Ferrari. No, you need to buy 10 cars. Buy a Mercedes SLR. Okay, I buy a Bugatti. Okay, keep going. You need 10 of them. Why do I need 10 cars? Well, because you want to diversify. Yeah, but I'm going to start buying stuff I don't like, or I don't understand, or I don't know how to drive. Right? I mean, you don't drive a Porsche Carrera 911 the same way you drive a Bentley, right? It's a different kind of drive. So this is kind of the same thing here. You want to make sure that if you're going to diversify in something that you understand. The point is that portfolio managers have to diversify. So when you hear them talking to you every day saying, "Oh, look, I'm buying this stock. Oh, look, I'm buying that stock." And you say, "Oh, so I guess if he's buying it, it can't be that bad." No, because they don't have just one stock, they got 50. They have to do it. These guys, the normal, the standard portfolio managers needs to sit down every day. I used to do it. They used to sit. You need to sit down with your management and say, "Okay, this is the risk of the portfolio. This is how much how much money we make, and this is how we're diversified." So they say, "Okay, so you're not doing anything stupid." No. We're diversified. We're doing great. In fact, some of them had a problem because some of them own Nvidia, and the stock kept going up and up and up. And as a share of the portfolio, Nvidia became larger and larger and larger. What do? Because if Nvidia is like this and the rest of the portfolio is this, they say, "Well, you only own one stock. Are you nuts?" And look what's happening to Nvidia now, right? It was doing great until they released the earnings, and people decided, woken up and said, "You know what? We're paying too much for this stock." Why? I don't know. I mean, this is what the market is about. The market suddenly decide that this is too much, so they start dumping the stock. Meanwhile, you're holding it up there, but the guy say he was buying it, so what come I'm not, right? So you need to make sure you understand what it is, that who's talking to you and what is happening. So in terms of diversification, in terms of risk, be careful. But again, you could make money. You could make money in the stock market. You could make money in the stock market simply by understanding what you're buying, understanding there's risk, and understanding where the volatility is coming from. Now, in terms of the volatility, take a look at the beta. Take a look at Tesla, for example. There is enough news, information, uncertainty, volatility around Tesla that just by buying puts and buying calls and buying puts and buying calls, you could make money. I will show you, for example, right now, because I'm talking and say, but what are you doing? What is it that you're doing? Well, right now, if I look at my options, I've got, I don't know if you've seen this, right? So this is how I'm doing today. I mean, the market hasn't opened yet, obviously, but basically, I have put, call, call, put, call. I'm here and I'm there. Why? Because I'm waiting for the volatility. Now, obviously, I'm suffering the past couple of days because the market is kind of doing this. The market is saying, I don't know, I don't know. Is this a recession? Is this soft landing? Yeah, I know you gave me 50 bips, but I need 50 more. But if you give me 50 more, because you're giving it to me because there's a recession. I don't know. We already spent a lot of money on Nvidia. Everything is expensive. I don't know. I don't know. I don't know. I don't know. So if you're here, that's not good because I'm kind of waiting. Like, okay, guys, okay, but but if it start doing that, that's what I want, and that's what was happening before. Let me show you my trade trackers. You probably may not see everything in terms of some of the trades that I've put on, but you could see the green and the red more. So these are the days where I made money in market. You're buying and selling, buying and selling. Now this is the fourth week. See, this is the fourth week of the month, and it's blank right now. What does that mean? I'm sitting here. So the story that I'm telling to myself and hopefully to you is that you want to place the volatility. Now, of course, there's another train of thought. You could say, well, I mean, I don't understand anything about options. I mean, okay, fine. Then what you do is you just buy a stock and you hold it. But which one? Well, right now, probably makes sense to go for small caps. Why? Well, because rates are coming down and they will benefit. The small caps benefit from small for rates going down because it's cheaper for them to finance. Yeah, but if we're going to have a recession, well, first of all, you're not going to have that kind of recession. Okay, it's not going to be that way. Okay, they're talking maybe right now unemployment at maybe 4%, and we'll see the numbers. Maybe we get to 6%. You're not going to get to 10, 15, 20% like we had in the 70s and the 80s, right? We had the same situation. I mean, not that it can't happen, but I'm not going to hedge myself like everyone else. But in the 70s and 80s, that's what happened, right? We had a recession, we had inflation because of the 60s with Kennedy and the I gave you a little bit of a history, but in the 60s we had Kennedy and the Vietnam War, so we spent a lot of money, like COVID, and obviously that creates inflation because lots of money is going into the system, right? So Nixon came in and said, "Hey, what can we do? We got to do something about this inflation." So basically, the guy Arthur Burns came in and said, "Well, the way you fight inflation is you raise rates, right?" And that's what he did. He said, "Well, hold on. I mean, as a president, I don't like." If you're going to raise rates, in fact, take a look at a video. I did a video a couple of days ago on that. If you're going to raise rates, something about the Fed is a Fed independent. If you're going to raise rates, that's not good for me. Can you just not do so much? Yeah, but we have to fight inflation. Inflation is going up. Yeah, but if you raise rates, it's great, but you're slowing the economy. As a president, looks like I'm not doing anything, and I get reelected because of what's happening in the economy. So basically, you say, okay, because unfortunately at that time Arthur Burns was not so independent from Richard Nixon, and Arthur Burns was a federal chairman. It does happen, and he didn't do it. He didn't do it, right? He kind of didn't keep the rates up. He kind of that, and he said, "Oh, we're done. We're done with inflation. Okay, we could start lowering the rates." And inflation took off, and then obviously we had inflation, and then we had a recession, and then they brought this new guy in. I mean, Nixon got out. They brought Volcker in, and he said, "You know what? This is it. I do not care. I am hiking those rates." Now, you think this is bad? 500 basis points. He rose it by 1,000 basis points. He took care of inflation, all right, but he threw us in a recession that lasted years. The stock market was crap for a long time, and that's what everybody's fearing. But we're not in that situation. I mean, there was a Vietnam War. There was a bunch of things happening. I mean, I don't think we have a global war. Well, hold on that thought, because there's a few things going on in with Israel and the Lebanese people and all this. So there's a few things going on in the Middle East. Hopefully, it doesn't spew out. I mean, depending who comes into power, because I'm into election in November. If it's Trump, probably he's got a better relationship with Netanyahu, so maybe he's waiting for him to be elected. That's why he's creating all the trouble in the Middle East, so that Trump comes in. But I mean, let's not even go there. Who knows? This is difficult enough to try to understand what's happening in the stock market, to try to see what's happening in the entire world, right? Because the idea is for you to try to make some money. So what do? We need to pick a good stock, right? So you need to pick a stock, obviously, that is not the Magnificent Seven. Don't wait for Nvidia. It's too expensive. Okay, unless you're going to play the option. So it's too expensive. No, but I gave you a bunch of stocks. I gave you Romaco, Miller Industries, MLR is a great stock. I mean, take a look at it. You want companies that basically, or follow me on my Patreon, so you could see all my trades. But at least you need to make sure that the PE ratio. I'm not a big fan of the PE ratio, but when I see a PE ratio for Tesla at 73, right? It's huge. I know it's earnings per share, and it may not be exactly what's going on in the reality because you want cash flow. But the market is at 20. This thing is at 70. I mean, I like Tesla. I'm buying options on Tesla, but on options, but not buying the stock because it's too expensive. The market is too expensive at this level. So you want something that has low P ratio because it's easy for you to you go into any kind of system, you look at the Market Watch, you look at the FinFiz or whatever, look at the P ratio. If it's 10, all right, think about it, look at it. What do you do next? Well, the next thing you want to do is look at sales, look at revenues. Is it going up? No, I know it's work, but you can't just listen to someone telling you what to do, which stocks to buy. You need to know what you're buying. Otherwise, the market goes up and down. You're going to say, oh my God, it's time to sell because everybody else is selling. And that's the last thing you do, right? You buy when everybody else is selling and you sell when everybody else is buying, but you don't buy when everybody else is buying. And that's crazy. Of course, you're going to say, but that's okay because I'm buying it for the long term. What does that really mean, the long term? Do you think that the people that were ready to retire in 2000 thought that when the bubble, the dot-com bubble did this, right? It was fantastic. And then it did that. Well, the market goes up and down. Yeah, but the problem is the NASDAQ took 15 years to recover. 15 years. I mean, you could have a great 401k one day and it may be gone the next. And then you could have to wait 10 years to get it back. And then don't forget, if you take the money out of the 401k, you get taxed on it. Like not income. It's not tax free. Okay. Don't 1 second that your 401k is tax free. So what you need to do is you need to make sure you understand what it is that you're buying. Okay. Don't buy 100 stocks. Buy enough so that you know what it is that you own, that you understand what you're buying, that you're following it, right? And then you don't sell for any reason, and you keep adding to the position, and ultimately, if you bought it right, it makes it, and you want to buy stock that no one has heard about, right? You don't want to buy Tesla, you don't want to buy Nvidia. These are like Lamborghini, they're like Ferraris. Well, I want a Ferrari. Wait, have you ever driven a Ferrari? Have you ever driven a Lamborghini? That thing moves so fast that it's not funny. It shakes. It's just for the look. It's not the most comfortable car to drive. Trust me. So what you need is not necessarily what you want, or what you want is not necessarily what you need in the stock market. At the end of the day, we need to make sure we understand what we're buying. So because essentially what I'm telling you is the two big principles of finance, right? Do you want to be on the credit side? Do you want to own something that makes money, that you understand and that you buy and it's comfortable? And no matter what happens, at the end of the day, as long as the sales don't drop to zero and they make no money, this thing is going to move on the way up slowly, but okay. Or, and this is where the action is, you want to take a look at the price risk. All you are focused on is what's going on with the price risk. What does it mean? Well, let me show you, for example, let me show you a chart. Hopefully you are able to see it. So let's take a look, for example, at let's take a look at Tesla. Okay, so let me share my screen with you. That should be quite interesting. Share screen. Let me share this screen. Share. Right? Do you see it? right? Look at wait, why is this not? Okay, let's take a look at SPY. Okay, look at SPY. Oh, I see. I can share the screen with the. So you see what's happening with SPY. We're going up, we're going down, we're going up, and then we're going down. We're going up, and we're going down. No, I know it sounds stupid. Hold on. You see the 50-day moving average here? It's over it, and now it's breaking it, and then it breaks it back. What's happening more and more is in the past it used to be above the 50-day moving average, and now it's cutting through. So as it's doing this, you get that on FinFiz. As it's doing this, you could see that more and more there's more and more volatility. How do I use that? Well, it's very simple. When we break through here, we know we're going to break back up again and back down again and back, and it's happening more and more and more frequently. Yeah. So what? The point is, we are only worried about the way it moves. It's like the weather, right? If you live in Florida right now, hopefully they're okay because there's a big hurricane coming there. If you are looking at the weather, if I were to ask you, and you're in the Northeast, what kind of weather we're going to get in November, December? And we're going to be cold. You're going to say, well, I think so. Yeah, probably colder than you're in the summertime. Wow, you're able to predict the weather? That's pretty good. Well, because I've seen the weather every single year, and I know that every year it goes up and down. Exactly. That's exactly what it is. So that's why we would do the same thing with the price volatility. We would see how this thing behaves, and we kind of and of course you want that, right? You want that volatility because you're making money really in one day. You're trying to capture a move in one day. Now, obviously, the way you're doing it with options is the shorter because an option expires. Remember, right? So it expires, the 20th of a month. This month, next month, and for the whole next year. So if you take something that matures in December, right, and the stock is here, the volatility is going to be like this. If you look at something that matures next week, the volatility is going to be like this, which is fantastic if you pick it right. If you pick it wrong, when it expires, the thing goes worthless, so you lose the entire money. But you don't need to take a 1 week maturity. You could take a year maturity. So you still have some volatility, which is higher than the stock. Yesterday, I was looking at some of the SPY for the volatility. Like the stock goes up 1%, the option will go up 10%. That's right. That's right. But again, you got to educate yourself. And this is what this channel is about. This channel is not about telling you the next stock that's going to go up. This channel is the same way I do with my students and my investors in the past, is to tell you exactly, to understand, to explain to you what's going on in the stock market. Remember, the stock market is not a science. It's a quasi science. What does that mean? It means that it has certain rules, but the rules tend to kind of, you have some leeway, which is great because you can make a lot of money. There's the most successful investor was worth 30 billion. The most successful brain surgeon wasn't worth $1 billion. I tell you that much. Sorry. But then again, for you to make money, somebody has to lose money. So it's like, dog eat dog. You got to really be out there, understand what's happening. So one thing that I think you need to realize is and understand it, what the story is that is happening today in the stock market. And the story is moving all the time. I hate to tell you, but that story is always shaking. So you need to keep up with it. You need to understand what's happening. How do you do? Well, listen to my channel, obviously. Take a look. Every morning, I've got some dailies, where I basically tell you, hey, that's what's happening this morning. And believe it or not, I know it looks like very daunting. I mean, a lot of my students says, Professor, how do I, what do I do? This is complicated. What kind of job I'm going to get? Take it easy, one thing at a time, one thing at a time. Understand what's happening in the market. You learn every day. It's like walking, right? And you're going to realize that, this is what's happening. So basically, the market is not doing anything right now. It's waiting for news, correct? The news are going to come out today about the GDP. And if the GDP is in line, they're going to say, you see, nothing to worry about. And that's how it is. But the only thing is, you also need to look at the chessboard, right? Which is okay. Checkers. We're playing checkers here, but then you have to start looking at the chessboard, and then you have to look at two-dimensional, three-dimensional chess. What do I mean by that? I mean that you need to understand the environment that we're in. What is the environment that we're in? Well, the environment that you're in, no one wants a stock market crash, or at least a recession driven by a stock market crash. Right now, unfortunately, you got the haves and the haves not, right? The haves are like worried about the stock market, saying, "Oh, look, my house keeps going up in value. It's fantastic, right?" But of course, you people are doing great. You're making money. Stock market is doing great. The houses are. You're worried about. I think housing went up 4%. I think the prices, sales went down, okay, but the prices went up. uh, so that's a nice problem to have. And then you have the other people, right, the one that are being very vocal, right, as saying, well, I mean, what about inflation? I mean, no, inflation is under control. Really? Inflation is under control? How could inflation be under control? My rent is up, my food is more expensive. Well, the Fed say so because they look at the CPI. Now, here, we're not playing checkers, right? We're playing chess here, right? So you need to understand the way these people think. That's how they think up there. Then we need to play four-dimensional chess. We need to go up there, right? What does that mean? It means that the world, right? In the 40s, we built stuff, we created stuff, greatest generation. Remember, in the 80s, it was all let's play around with the money, let's do Wall Street. Remember the movie Wall Street? That was all about. Now it's about something else. It's about the haves and the haves not, right? It's about conflicts. And it's just not us. In Europe is like that also. This is what's happening right now. And now, of course, the new thing that's happening is AI. AI might change. We were saying that about blockchain. I don't know if you remember in 2008. Say blockchain is going to revolutionize everything. No more stocks. I mean, no more dollar. We're going to use Bitcoin. Blah 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 blah. At least not yet. But AI, that's the thing, right? AI is changing a lot of things. AI is becoming more powerful. AI is going to change the way you do business. It's going to change the way you work. I mean, soon, my Tesla is going to wake up one day. It's going to go pick up someone, take someone to the airport, and bring the car back. Robotaxi. How do you think that's happening? Right? You need AI for this. This thing is learning the road, is understanding everything. I mean, let's not get into an AI course here. The point is that AI has a potential to revolutionize everything. In addition to that, we have something coming up that you may not be aware of. We have quantum computing that's going to speed everything even faster. So my students come to me and they say, "What kind of job should I get in the future?" I say, "Well, let's see what happens tomorrow, because things are changing so fast that if you want to be a security analyst, you've got models coming up that do the job." There's even, and this is kind of creepy, what they're doing now, like someone that you love, died, right, or is in the process of. So what they do is they record that person's voice, then they put it into a large language model that learns how the person speaks, that learn how the person thinks, and then you could have a conversation with your dead grandmother every day. Yeah, because it's in a box, and the worst part of it is, or the best part of it is that the model learns. Like, for example, "Hi, Grandma, how you doing?" "Hi, John, how you doing? Everything is okay today?" You say, "Well, she used to say that all the time." "Well, today, Grandma, I went and I won a prize." The model will learn that, and tomorrow, the model is going to say, "Ah, John, so are you happy with the prize that you won yesterday?" That's right, and it will learn. And then before you know it, it's going to have a mind of its own, and you could have a full-blown discussion with your dead grandmother. How you know the difference? That is what's happening. That is what's coming next. So that's four-dimensional chess, right? That's what these people are playing out there. They're really focusing on what is going to happen next. How is it going to impact the workforce? And frankly, once you have these kind of things happening at that level, and you're on the ground working, well, don't worry about it because there's nothing you could do about it anyway. There isn't. I mean, the only thing is what you could do is what you could control. And what we could control today is making money through the stock market. What we could control today is by understanding what's happening, being more you need to be in control of something. So it's okay to be checkers, right? And we're not talking making millions of dollars in one day. No, believe it or not, by playing the volatility in the stock market and with options and with stocks slowly, by understanding what's happening, you could make 30, 40, 100, 150, 200, 200, $300 a day. Beats working, right? No, but unfortunately, you need to know what's going on. You need to understand what's happening. You need to know the rule of the games, right? We're not trying to predict the stock market, like what's the next stock, what who's going to win, who's going to lose. No, this is not what it's about. This is about being educated. Like everything else, I mean, there's no secret. Now, of course, if it's for pure entertainment purposes, yeah, sure, you could, I could tell you that, if you invest this money every day for 10%, you'll be a millionaire one day. Does it really happen, really? If it was that simple, everybody would be doing it. Everybody would be doing it. It is not that simple. So I guess it has to do with luck. So are we saying that maybe luck has something to do with it? Is there a luck that look? Let me show you again. How is Tesla doing? It's 9:11. No, Tesla hasn't opened yet. But what's moving this stock? Let's take a look at this. Let me show you SPY right now. Right? What's moving this stock up and down since April? I mean, you had some news. You had some news about the company, but every single day, every single minute, it doesn't work that way, right? This thing moves in mysterious ways, unfortunately. We don't understand what's moving. Is it totally random? No, it's not random. It's not going up and down sideways. You could see a pattern like the weather, right? It goes up and it goes down. It goes up and it goes down. It goes up and it goes down. You just have to catch the right time to do it. That's all it is. You need to make sure you understand how it behaves. But once you understand it, now of course, you may not want to do it to make millions of dollars in the stock market. You may just want to do it so that you understand the world that you're living in, that you understand what's happening in the economy. That is very important also. There's a skill to be done here, to be had. Of course. So what I would say at this point is this a market to invest into? Yes, it is. You need just to understand the rule of the game, and you need to understand what you're buying, and you need to be aware of what's happening. That's all. I mean, this is not that complicated. All right. So you could take all that to the bank, and don't forget, subscribe to my channel and send me a like.